the US oil spot. And recently we had some sell position triggered, and in fact price is moving very well in that regard at this point. However, during yesterday's trading session, we were looking out for buying opportunities, especially the breakout of that descending trend line, which we projected during our live session yesterday. And of course, we did see price breakout of the trend line, and then price went to the upside but did not do very well as the traction was not strong enough, hereby taking us out of one of the positions in a loss. So we recorded our first loss on the US oil spot yesterday, and it's okay. We need not bang our heads over this, as this is likely, of course, going to happen in the market. As but most importantly, we want to ensure that we have a well-defined risk management strategy, so that whenever we lose money, we are only losing a small percentage of our account that our emotions can actually handle. So at this point, we have a stop loss hit yesterday before price action did break down the descending trend line. And if you remember vividly, what I said during our live session yesterday is that if we want to sell this asset, we will be looking out for selling opportunities only if price can break down the lowest point price action has gotten to in the last 1 week to join a bearish move. And I also mentioned that we could actually sell even before the breakdown happens if we can notice a breakdown of the descending trend line and retest of structure, as you will see what happened during the early hours of today. We saw price breakdown, retest the structure, welcoming a sell position at the $72 area before pushing price to the downside and breaking down the $71.40 level. So at this point in time, you should be having at least a minimum of one sell position and at most two sell positions running in profit at this particular point in time. And for those of you who capitalized on this opportunity, well done, and kudos to you for being on standby. Now, with a sell position running at this point, with price action moving significantly well in our favor, the next thing we want to be doing right now, you know how we do it in this community, is to move our stop losses and secure the current sell position. And if you would ask me at this juncture, I'm of the opinion that anywhere around the second entry point here at the $71.40 level seems most appropriate to move all stop losses to, securing the position while we also give enough room for price action to breathe. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying this asset, or are there chances that sellers will continue to push price to the downside? Well, before we can go into a technical detail as to what we are going to be doing, it's very important for us to take a quick review of the higher time frame, having an holistic technical details onto what is going on the higher time frame, and of course reveal the fundamental factors that are affecting the market sentiment behind the scenes. Well, the way things are going right now, the downward pressure on US oil, or let me say the crude oil, is attributed to a slight increase in the United States crude oil production, particularly in the Permian Basin, where output rose by 5.5 thousand barrels per day to 5.9 million barrels per day, as reported by the Energy Information Administration yesterday. Now, another latest development is the completion and expansion of the Trans Mountain pipeline in Canada, which is contributing to facilitating the transportation of crude oil, boosting the North American crude oil output. Now, we all know how Canada is ranked as the fourth largest global producer of barrel, and this latest development is going to be positively impacting the supply of oil. And you all know that when there is an increase in supply, what happens? Because there is a surplus of the asset in the market, the price will definitely drop. And as a result of this, we have been seeing that reflect on the chart as price is back below the descending trend line and in fact broke down the $71.47 level today. Now, despite these factors that supports the bearish expectation here, we cannot ignore the Red Sea supply disruption acting as a limiting factor for a more significant downturn in oil prices. Recent reports indicated another airstrike targeting a Houthi missile facility in Yemen. Now, the US said the motive behind this military strike was cited as an imminent threat posed by 4 missiles to merchant vessels and US Navy ships in the region, which of course has been going on in the last couple of days. Then the final factor that is also affecting the US oil spot is the strengthened US dollar, which is offsetting the impact of the Red Sea disruption, affecting the demand for the dollar denominated commodities, including oil, for countries using alternative currencies. Now, whenever the dollar rises like this, and we've been noticing this in the last 2 days, commodities, US dollar denominated commodities get to become more expensive for other currencies to buy. And as a result of this could reduce the demand for oil, increasing the supply as well, and of course, pushing price to the downside. Now, given these intricate situations we have here, exercising patience become a crucial habit we want to inculcate as we closely monitor the levels that we identified on our charts. Now, with all this information gathered here, and of course the factors we've talked about now, let's run through the higher time frame to see how the market is actually reacting to all of this event from a technical standpoint. So to refresh our memories, we started the new week on the daily time frame where we were able to identify a simple setup after considering the nature of price action since the month of September. That's an historical data of about 4 to 5 months. And it's quite obvious that price action has been very, very bearish, as you will see the appearance of a uniform lower highs. And when we connected the series of lower highs, we have this beautiful descending trend line to work with. And of course, whenever we have a descending trend line like this, you will know we look out for more selling opportunities as long as price remains below the structure. However, something interesting happened at the beginning of the month of December last year. That's about a month and a half ago. We saw that despite the strong bearish momentum, as soon as price got into that area around the 68 and $69.50 level, we begin to notice the emergence of buy pressure around that area, giving us a signal that sellers are finding it difficult to break through that area. Now, this character continued into the new year, as early as this year we saw another sharp rejection, giving us a higher low, and of course giving us an idea into the build-up of momentum behind the scenes by the buyers. And as a result of this observation, we noticed that price action may gradually be transitioning into a reversal pattern in the form of a double bottom structure, where interestingly, the neckline of this pattern shares a beautiful confluence with our key level at the $75 area, which also tallies with that descending trend line, and we were looking out for price breaking out of the structure to give us a beautiful confirmation of an uptrend scenario. However, if we look at what has been going on here in the last 24 hours, considering the fundamental factors too as well, it appears that price is respecting that descending trend line, and it appears it's continuing to push price to the downside. Now, is this reversal pattern going to be negated, or is this going to be a fake shakeout to incite the momentum, the bullish momentum we are looking forward to? Well, if we scale down into the 4 hours time frame, you will see that the setup we identified on the 4 hours time frame, which of course includes this ascending trend line captured since the beginning of the month of December, appears to have been broken to the downside. And when we have our ascending trend line breached like this, it's more or less a sign that the trend line may no longer have the capacity to continue to negate the bearish attempt, hereby welcoming the idea of considering selling that particular asset. Now, if we zoom into what has been going on in recent time, you will see that we are at a crucial juncture where price action is trading below the $72 area, and of course appear to have broken down this ascending trend line. So at this point, with this candle here still has about 2 hours 35 minutes left, so we still cannot say we have a true breakdown yet, as it will take about 4 to 6 more hours to really confirm that we have a true breakdown here, as it could still turn out to be a false breakout, giving us a hammer candle in that regard. So we're going to exercise patience, as we are at a crucial juncture in the market. We are depending on how price reacts. So this ascending trend line is going to play a major role in guiding our decisions for today. So we have an area around the $71.40 level, which is going to be on our radar for the New York session today, as depending on what happens here will determine what we will be doing next. Now, with the information we've gathered on the higher time frame, let's scale back down into the 4 hours time frame and let's look at that $71.40 area we just talked about now. So look at what we have right now. Price action has broken down the $71.40 area, and at this point we want to see how far this momentum is going to go. Now, for those of you who had missed out on this opportunity, I would encourage us all to exercise patience, and let's see if the market will present new opportunities for us to capitalize and maximize on this bearish move. So one of the things we may be looking out for is one, price may come back to retest the $71.40 level, where they continue selling pressure below that area, emphasizing the fact that buyers are finding it difficult to climb above, could incite the next level of bearish momentum. Or it could even go to as far as this descending trend line to retest it and continue selling pressure around there to incite a downtrend move. So this is what we will be looking out for today, to see if the market will present new opportunities for us to maximize this move. So let's mark out these levels on our chart as we look out for more selling opportunities at this particular point in time. Now, as it is right now, the lowest point where price action has been for this week is around the $70.72 area. So you want to be marking out this level too as well. So we have the $70.72 level. So we duly mark that one out too as well. And if price can break down, retest, remember what I said here, break down and retest, then we could still add more sell positions to our existing trade. So this is what I look out for selling opportunities in this market. Now, in as much as we look out for selling opportunities, we cannot ignore the potentials of buyers. Remember the concerns about the disruption of oil supply in the Red Sea, which is acting as a limiting factor for more significant downturn on crude oil prices, could incite some bullish momentum in this market. And if the escalation continues, there are high chances that the demand for oil could increase despite the expensive nature of oil prices, and it could skyrocket price too as well. Now, based on this current structure we have on the 1 hour time frame, what is it that we will see on this chart that will make us feel comfortable and confident changing our bias from bearish to bullish? Well, the most important factor here, which is the descending trend line, needs to be breached and broken to the upside before we can start considering buying this asset. Now, if we are going to be buying, I would like to see a breakout and possibly a retest of structure where the inability of sellers to break down their descending trend line will be a beautiful signal to join an uptrend move. And in fact, we have multiple levels here that we will be using to maximize the potential of this bullish move. So I encourage us all to mark out these levels on our chart, and of course the descending trend line, which is going to be playing a major role in guiding our trading decisions for today. So this is my simple view on the US All Sports for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset. You can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session.